All right, here we are. Matt, we have Matt Midson on, the CEO of North America for CPQi. Matt, welcome to Around the Coin. I'm excited to dive in with you a little bit. We didn't get much pre-show, which is great. So this is going to be just a fluid conversation that you and I will have. For myself, listeners, you want to just give a quick background as to how you got into the driver's seat of where you are and what your path to being a CEO of CPQi was?
Yeah, sure. Listen, good to meet you. Thank you for your time. So you can probably tell by the accent, originally from the UK, but I am as American as I possibly can be at this point. So I've been in the US for heavens, 23, 24 years ago. Came across with on a business trip with Deutsche Bank. Met the wife on the second evening, and then I guess the rest is history. So can tick the box in terms of the American dream. Professionally, I'm an IT guy, so I came from kind of the grassroots, hands-on roles. I've worked in a number of large global tier one banks. So I started off, as I said, hands-on roles, and over the last, over a sort of 25-year period, I was fortunate enough and lucky enough that I progressed through, various ranks within the banking industry and technology to become like a CIO of, I guess the most notable one was HSBC. I have a heavy background within technology, within global banking and markets. But over the last 5 or 6 years, because of the changes in where I felt technology was, pivoted a little bit more into retail, commercial banking sectors, because typically a lot of the technology and cap markets, in my mind, is relatively mature. So 28, 29 years in technology. I got into consulting about 5 or 6 years ago. Wasn't actually through choice. Was probably one of the worst buyers of consultants. I don't think I ever did. I just used to think that they were typically PowerPoints and a lack of substance. So finding myself this side of the fence is quite interesting. The irony of being at CPQi now is I was a client of CPQi. So having used them when I was at HSBC, they gained a lot of credibility with me in terms of execution. And as I said, I pivoted a few years back. I just felt that it's becoming stale, if you like, in terms of the banking industry. There's only so much you can do in the big places, and being in a smaller firm and seeing the evolution of a lot of the digital technology and stuff like that was something I wanted to be part of. So, our client base is a lot of big, large banks and insurance companies. So for me, what I'm getting an opportunity to do is add value and contribute to those sectors, but not just be in them, is be on the outside in. So, so far, so good.
Yeah, I'm curious. What's your take on the banking lifestyle? Like, do you think it's a productive? Like, would you wish it upon your children to get into? Like, do you think it's a profitable endeavor from a personal perspective, or do you think it's like soul draining and extorting? I've heard mixed reviews, and I've never been in banking.
Look, I think I think for me, if I look back on it personally, being in consulting for the last 6 years has probably helped things for me personally. I made a lot of, when you're ambitious and you're very heavily wanting to go up through the ranks, working in the banks and stuff like that, it tends to consume a lot of your time. There's a lot of travel. There's a lot of time you're away from your family. The upside of that is that there is obviously the benefits. I've had the opportunity of working, in Asia. As you can tell, obviously from Europe, I've worked in many international banks. So, you've had the opportunity to work with every single, set of culture. I have a lot of experience in South America as well as North America. So, for me, that's invaluable. I would say in the earlier years, it was much more lucrative. I think my colleagues are in the banks now. It's not what it was in terms of, there's much more pressure on cost and stuff like that. So, no, my kids, God,
Why
no.
is that? Is there like a?
Well, I think you've all seen the history of
Yeah,
it,
I'm
right?
curious on that.
Yeah, there has always been that. I think it depends. Like within capital markets many years ago, right, there was an explosion of new products, right? The derivative products, and things were very flow. And as a consequence of that, those types of skills, if you're a technology person and you had a wide level of knowledge of asset classes and trading front and understand things front to back, and you had experience with technologies. There was a certain mark-to-market value for that type of skill sets, right? And then it become, when you look at New York, you look at all the big banks, everyone's competing for the same level of talent, and by the nature of things, that would force the value of those types of skills up, right? It's a demand and supply model. So I think in the earlier years, those skills were rare. People were fighting for the best talent, so there was an ability for people to ride that wave. Why is it less so now? I think there's much more scrutiny on it. I think regulation has forced things down. I think when I look at it as a technology guy, many of the banks and services and clients that we supported have kind of bought themselves too much technology or implemented too much, and you start carrying a higher level of cost, right? If revenue slows down and you have all that fixed costs, and it's not rocket science. The reality is you have to reduce your costs, and often that comes with impacting people, right? And reduction in things like compensation. So I think it's certainly more. It's probably more balanced than it should have been, but no, you've all seen the Wall Street movie, right? I mean, it's just this bizarre evolution.
Yeah. Kind of, it feels like, I mean, from the outside, I have a couple of friends and some family members in banking in New York, and it feels like the heyday, maybe, I don't know, 15, 20 years ago, where there was a lot more relationship-driven, unique value creation, and now maybe with technology and regulation, there's downward pressure, so the banking services are more commoditized. They're probably they're more off the shelf. And so what does a bank do to differentiate if they're constrained by regulation and just the way things are? I don't know. I mean, do you think that it's kind of a natural evolution where there's innovation, there's this S curve of innovation, and then we're kind of in this stagnant point with banking, and then the next wave? I think crypto is pretty interesting, and how it looks to be the next way, that the future, how should I say it? It's like an innovative way that you can receive the same value in a more effective, safer, more distributed way. I curious your take if you see blockchain and crypto as like in the day-to-day from the banking world, or if it's really not there yet.
I think you're seeing much more of it for sure. Look, I think a lot of these technologies exist out there. For me, it's a question of how mature an organization is to adapt them and use them, right? You have some banks that still have a lot of legacy technology. They've got too much replication, duplication within their architecture. So just going out and spending money on cloud or blockchain or something like that may not have the funding, right? From my personal experiences in various leadership roles, you actually found that your discretional spend on technologies has got smaller and smaller and smaller, because what you actually had put in for the various businesses over the years just was so fat and expensive to run, plus the cost of having to support and execute regulation. Then that delta, that piece of money that you had in order to try and experiment and get yourself to the next wave and leverage off of these technologies that either drive down cost or help support revenues, just wasn't there. So it will depend from one place to the other, right? I mean, clearly, if you look at some of the bigger banks and stuff like that, they've managed to work that out, and the applicability of these technologies are things that they're exploring greatly. But no, blockchain, cryptocurrencies and stuff like that, I certainly see that they are the way forward, right? I mean, there's a lot of those discussions around some of the fun and games that are going on in the equity markets at the moment, right? And the need to use blockchain and reduce settlement times and stuff like that.
Yeah.
You can look in cap markets, foreign exchange. I mean, to some degree, why does a foreign exchange transaction take 2 days to settle on a spot? Yeah, I could send you money right now through Venmo, right? So technology is there. Technology is an enabler, but the ability to use it, for me, often depends on how much money these institutions have to use to spend in order to transform, right? Because to some degree, what I witnessed when I was in it was slight paralysis, because we had too much cost, and unless you free up money, no one's going to write a blank check around that investment.
Yeah.
So I see that.
Yeah.
But I do see that changing. It's horses for courses in some way.
Yeah, and I'm curious on a personal level, what's your day-to-day look like? I mean, give me a sense for the scale of the operation that you're leading and what you're tactically thinking about on a day-to-day.
Yeah, I'll maybe start with what CPQi do, right? So in its most simplistic form, for me, we're an IT execution firm. So what does that mean? I mean, people are probably familiar with, the likes of Wipro, Cognizant, like the large technology providers. We offer, more or less the same level of services. So, everything end to end in terms of technology execution and support for banks are an extension to them. We have, what I say, some of the legacy business around, we support managed services, outsourcing. So there could be anything from implementation and execution or build of technology platforms for banks and insurance companies. It could mean that, like I said, they've got too much cost carried on some of their platforms. They want to outsource it to us and leverage the fact that we're well positioned in Halifax, in Canada, and Brazil to offer sort of lower cost centers at a better price point for people to support things.
Help me understand exactly what that means. Lower cost centers for solutions. Like, is that you're talking about customer support or?
Well, yeah, I mean, look, if you go back to it, ACIO, right, in a bank at the moment sitting in New York City probably is under a level of constraint with costs, right? The business is coming back saying revenues are not growing, nothing's great. Reduce costs. Well, the first thing you do is if you can't switch platforms off or close down businesses, which is the quickest way of reducing costs, then it's all back to people. Well, you can only keep firing people, reducing their pay anymore before you start thinking about where can we do the same things in a lower cost place, right? And you saw the explosion of people using India and offshore over the years, because typically you could buy the same talent and skill sets, right, at a lower cost just by nature. So Halifax for us is an ability again to provide US clients with, as I said, highly skilled technology people within all the various different sectors, capital markets, commercial banking, retail, at a lower price point, and they would just keep building it in New York City. Similarly with Brazil. So, for us strategically, because, technologies have evolved, like there's much more agile techniques these days. People talk about agile DevOps. I mean, this type of rapid execution requires things to be within the same time zones, right? So that's played to our advantage commercially, because, trying to work in an agile, rapid way with a 12-hour time zone with people offshore, it doesn't work, right? So, seeing a lot more demand for those types of services. So, an average day for me, I mean, we have 2 or 3 clients now that are looking to leverage off of us as being their extended IT team. They don't want to carry that cost internally. Right? You'll see the theme of costs associated with this. People have to be creative. The business doesn't stop, right? Unless you're printing money and your businesses are saying, yeah, keep spending on tech. As a technology person, whether you're in a leadership role in tech, in a bank or an insurance company, or whether you're on this side, you've got to be creative in the way you can continue to support your businesses, support your clients, evolve and deliver, and leverage off all this tech you keep mentioning, right? But how do you do that? You've got to be creative, and sometimes using skills that exist in other countries is a way forward, and that certainly is a key component of the services that we offer. And day to day, looking at a lot of demand in that space.
You see a lot more in South America because they're on the same time zone, more so than.
Well, we're positioned in Fortaleza, Brazil. Obviously, we have an office in Sao Paulo as well. I mean, Brazil, what does it vary? Between 1 and 2 or 3 hours, maybe, with adjustments to summertime, which I think they've changed. So when you look at that and compare that to organizations using India, it's 12 hours. 1 to 3 hours is typically really within the same time zones, right?
Yeah. And what are most of these folks doing down there? Are they doing like sophisticated banking skill sets, or are they more or less customer engagement?
No, they're a mix. As I said, we do a lot of things like managed services. So some clients will outsource the support of their platform to us. Some people have bought a new technology. They want us to help us implement it, support it, and integrate it. We have a growing client base of fintechs. fintechs that don't want to, they need to evolve their product, right? They want to help, we can help them sell their product because of their connectivity in their marketplace. And then they need to implement their product. Well, unless they want to build themselves large IT teams, they're going to look for strategic third-party partners. So, a lot of the guys are in, the team that are in Brazil are building some really cool technology, right? We're doing a lot of cloud migrations. We do a lot of sort of digital builds for banks, and it will vary. I mean, again, if you think about what we do, we have the ability to be an extended support model to any organization, and we typically focus with banks and insurance companies, on this side of the pond.
Yeah.
So it will vary.
Yeah. Yeah. What's your take? I've used them and really liked them. Novo and Aslo. These are like cloud-based banks. So they're they are banks in that they provide a lot of banking services, but they're not incumbents. They seem kind of categorically different from, a Chase or a Citizens Bank or one of these. Do you think these are, I'm sure you've seen these new models come up and raise money as really like, it feels like the startup DNA encapsulated in a banking business model as opposed to the old school like banking businesses. Are those exciting to you? I mean, do you see those as just kind of a veneer on the existing model, or
no?
What's your take on that?
How can you not love it? I think we're all in an age of disruption, right? I find it fascinating. I'll be honest with you, because I believe if some of the big banks do not evolve their technology, evolve their services, then they're going to get their lunch will get eaten by a lot of these sort of disruptive, call them new banks in many ways, right? I think banking as a service is very different. People aren't going into branches anymore, right? You're supporting a different population of people that have a different level of demand. So, no, I'm fascinated by them. I mean, I'm interested to see. You can only have so many findtech startup, right? You see that even with technology tools. As an AI product and creator every other day. I mean, at some point I would expect to see a consolidation of those.
I agree.
It's like the .com thing. How is that sustainable? But no, look, and we're in a world of digital, right? Everyone's running around talking about digital transformation. Some people kind of nail what it is and understand what it is and the application of that. And others, if they sit tight and don't do anything, it's going to struggle, right? I think you're seeing a lot in the retail side, right? For people like us, the exposure. Where I'm fascinated is commercial banking. Where typically a lot of the technologies are still very legacy. So when you got the retail people like us, then you get retail, small retail businesses. But then when you start to get over that growth period and you have a company, millennials create themselves a nice little fintech, and now that fintech is more of a commercial client that doesn't just want to bank online and deposit checks, but they want a wider level of products, right? They become global. They now need to be concerned about foreign exchange. So how that sector for me, I still think is was a great opportunity for people to potentially explore or exploit. But who doesn't like disruption?
Yeah, no, it seems like, my 30,000-foot view, it feels like there's kind of this entrenched relationship between many of the big banks and the government, where after the 2008 recession and the bailouts, it seems like they're almost alive too long. Like, how is it true that Chase Bank and some of these local banks that have offices and high rents in primetime cities, like, they're competing and they're profitable and they're operating? I can't quite wrap my mind around. Do they just have cash in the bank, so to speak, or are they somehow alive with the string of the government's resources? It almost doesn't feel like a fair competition in that sense. I don't know if you've seen that as well, or if that makes any sense.
Yeah, no, I do. Look, yes, of course I do. I mean, I don't know whether you watch the news at the moment, but there's a lot of fun and games going around the equity markets. I don't want to get myself into trouble, but again, we're all a bunch of retail people, right? We want to buy stocks, and we're doing it on apps only to realize that there's one or two big players that are consuming that and can shift markets any which way they want. I mean, I think there's still a large level of control and monopoly on these types of things. It's probably what we see with banks. But again, you know, with the evolution of these things, I just think things will change. I think maybe the technologies were not as advanced, right, in those days in order for us to be as disruptive.
Yeah.
But with the evolution of digital now, and even from look at the way we work now, we're all sitting on Zoom, we're on remote. Hybrid working will be a thing of the past. Proximity is less of an issue. I think it's just opened the boundaries a little bit more, right?
Yeah.
I'm fascinated by some of the US regional banks as well. Silicon Valley is one I would pick on, where they're really highly disruptive. They're pumping a lot of money into the digital offering, less around not opening bricks and mortar. And as I said, a lot of their client base, from what I understand, were fintechs, right? And as those fintechs pay back their loans and want more complex products, if something like a Silicon Valley or a bank like that are starting to, proactively build that out, they're going to capitalize, on it. I think what's historically been a nightmare is changing your account, right? So think about it. Maybe less so from a retail. I'll go back to commercial. But if you're a business and you're like, well, I'm with Chase and I want to go and move to, I don't know, Mickey Mouse Bank because it has better technology, the entire onboarding is painful. Therefore, if someone can simplify that onboarding, make it more streamless through the use of technology, can handle all the regulatory stuff we have these days, like KYC, know your client, and all the stuff about that, then, there's a space to capitalize on that, which would then again be disruptive and take a lot of businesses from the big boys. So remember, technology is an enabler, right? I mean, it underpins everything. So, using this stuff right, I think, again, can be disruptive. So I think the big boys and the big banks, they've had it good for a while, right? But it's kind of game on in many ways.
Yeah. How much of I don't know if you know this, but I'm curious. If you look at a big bank, how much of their business, their actual revenue, is from consumer-facing products, and how much they care about consumer-facing products versus B2B versus commercial services that's not visible to the average person, like HSBC or some large bank. They're not. Are they hyper concerned with the consumer focus, or that's just kind of a one line item in a much bigger picture?
Yeah, probably maybe since I've been on the consultants, a little bit less knowledgeable about that. I can only kind of observe from the outside. I mean, HSBC, for example, have just announced that they're exiting the retail business, right? So,
oh, really?
Clearly, they've looked in the States and gone, okay, but then you look at it and go, well, what is the United States or North America for them? I have to assume it's heavy focus on commercial banking. They'll maintain institutional banking piece because you have to, but an exit from retail would suggest to me that they're running it's not profitable, it's expensive, it's losing money, right? So that would be a prime example where you'll start to see where people are focusing their attentions. I just, maybe I'm repeating myself too much, but I just see commercial banking as really the sweet spot that people could be focusing on. I'm a global markets guy. For me, the products have really returned to flow. There's so much restriction on regulation. The days of complex derivatives and all this MBS stuff, that some of the stuff that created the challenges in 2008 is over. It's not as exciting as it was there. If retail's now exploding and you've got all these competitor banks, then where are people competing for what space? Where do they want to monopolize and capitalize on? Again, I think it depends.
Yeah, you've pretty much spent your entire career in banking in one way or another, right? You're straight out of school, been in IT as a Royal Bank in Scotland or a UK. Is that, what advice would you give to yourself if you were going back or talking to people just getting into banking today? How may you steer them one way or the other?
I don't know. I have two teenage sons. One wants to be a doctor. I'm not sure. The other one wants to be an entrepreneur. And my daughter, I don't know yet. How would I steer it? For me, being in the bank If I'm personally honest, I don't think it's as exciting as it was in the days that I got to experience. I mean, pick on RBS for example. I remember joining them after studies. They're 30 people in, I think in the city of London on a trading floor. Look at and then to see the extension of them arriving in Stamford, Connecticut, and buying NatWest Bank and arriving in the US. I mean, that was, in those days it was unheard of. Look at the growth of that, right? But then they made mistakes in acquisitions, which then means that's scaled back. I've spent a lot of my life in international banks, right? I mean, the excitement I've had, and never sadly was able to experience working in, I would say, the large US banks. But what always attracted me was some of the foreign banks that are based here in the US with their regional based offices, and you got the diversity and the connectivity back to Europe or Asia or stuff like that was always for me, an attraction of it. But I don't know. Look, I think that the exciting stuff is obviously the evolution of the technologies. The question for me is as a technologist, if I started again, would it be a career path in technology in a bank, or go play with the fintechs and stuff like that? I think you'll see less demand, I think, going forward in terms of people to follow the same path I did. I mean, as you said, for me I had a great ride. It was an awesome time, right? But 15, 20, 25 years ago, when you saw a lot of these banks, insurance companies grow, their technology was infancy. I mean, I remember starting in banks, we're still writing stuff on pieces of paper, right? Now we talk about RPA, robotic process automation. So, it's a maturity thing for me. I was lucky enough starting off where you're at ground zero. It was manual, right? You saw, foreign exchange. There was no straight through processing, so you built trading systems. I mean, unless the technologies evolve and people are going to be spending money and dramatically in some of these banks, the attractiveness of joining, the big banks and some of the ones that I were on in the past, if they're not doing it, why would a technology guy want to go through that path? They'll go work on a disruptive bank or a new bank, right? Where they get to really make an impact. I just think, I'm an old fart, so the reality is that people are younger and smarter now. They're much more innovative, entrepreneurial. They take more risk. I mean, think I'm 51 years old. For me, getting into a bank, it was a good, steady job. And you could climb the ladder. I just don't think that exists. I certainly wouldn't put anyone off, but I don't know what I was able to go through as a journey is the same as what it was 25, 26, maybe 30 years
I remember when I was, I'm 33 now, when I was probably 13 years old, 14 years old, my uncle, who was a CTO at a bank in New York, took me to Wall Street. He got one of his friends had a way to get us in. So we went on the actual stock floor, stock exchange floor, and it was really cool. People were actively trading. They were like moving around, and they had these little tablets, and it felt like it felt definitely integrated into the future with technology, because they all had the same access to data on their tablets, but they were still in person in these chairs, doing deals all day. And I don't think that's the way it is today. I mean, maybe there's some relic of that, but it certainly feels like more people are at home, in front of a computer. There's less need to be in person, in your face, which I think there's some really kind of romantic idea about the in-person, like the hectic nature of the in-person stock exchange, where everyone's like, buying and selling with tickets, and you kind of see these like old school views or films of people just competing to get in, buy orders or sell orders, which I think that's pretty cool to reflect back on where it came from. Outside of banking, what are you into? What's your non-banking?
My family. My family is my priority. No, me as a person, I'm an avid DIY guy. So the funny thing with me is always that sad typical suit that used to come home from Wall Street. I live in Montauk, New York, so it's a beautiful part of the world. So I like to get outside, but I'm kind of handy. Maybe that's my East London background with my uncle was a carpenter, so I like to get my hands dirty and stuff like that. Which for me, as I said, that's still links to my level of desire with technology to be creative, right? To produce something, to deliver something. So that's
Yeah.
me. No, I mean, look, I've two teenage sons, a daughter. So, I think the pandemic for me, as I mentioned earlier on, I try to look at everything on a positive standpoint. I think that we've all realised that proximity is the most important thing, and the years that we spend away from our families is an opportunity that I've had
Mm,
to kind of give back to that. So, but
mm,
no, I mean,
yeah.
other than
Yeah.
that, I'm having a midlife crisis. I live in Montauk, so I'm a terrible surfer. My sons have fun with it on the weekend, splashing around, looking like I'm drowning. But apart from that, pretty
what
boring.
is a midlife? If you were to explain what a midlife crisis is to someone who has no idea, what is it?
No, midlife crisis. What was mine? Um, I don't know. I bought a car once. I don't know. It was the dumbest thing I ever did. But I went into Mercedes Benz and we were releasing a truck, and I don't know. I came out with some ridiculous thing that was just stupid. I think it sat in the garage for 6 months because it was like two wheel drive, 0 to 60 in 5 seconds, and you couldn't drive it because the wheels would just stay stationary if it was wet out, or snow. It just wasn't conducive. It was dumb. Two seats. Um,
Wait. It was actually a dumb decision. You regret buying the car?
Yeah, I mean, I think it was a midlife crisis. I don't know. People talk about doing weird and wonderful things. I don't know. I think people say it. I don't necessarily what it is. I think that what it is, maybe for me, is, I think between your 30s and 40s, you're getting married, you're having kids, you're distracted and all that sort of stuff. You get to your 40s and 50s, and if you don't keep an eye on your career and where you're going, I think maybe what a midlife crisis is, it's like, wow, I'm 51. Is this what I'm going to be doing till I'm 60? Like, oh my God, there's only another 10 years left in this game. I think for me, there was always that time, particularly, when you rode the wave in your younger years, you felt like it would go on forever and ever and ever. And that, isn't realistic. So I think maybe in reflection, I look back on it and go, my midlife crisis is just a blatant awareness of some of the stuff that maybe I
Yeah.
should have, you reflect back on and go, I maybe shouldn't have done that, or I shouldn't have, maybe I should have saved a bit more money and not done
Yeah.
that dumb stuff. So maybe midlife crisis is really reflecting on the fact of where you are and looking around, you're becoming a little bit more aware, you're not so
Yeah.
consumed in things.
Yeah, it is. It's interesting because it's so much psychological perspective. It's a perspective uh, as a comparison, right? A perspective is a comparison. So if you're like, okay, we live in America, which is the most prosperous or one of the most prosperous countries in the world. You're in, not you per se, but someone working in tech or in Wall Street is in by virtue of their work and their income, top 1%. So you've achieved the thing that society has told you since you were 5 years old, that you need to work through all the different levels, like get good grades and level 1, 2, 3, 4, 5. Then you go to high school, then you go to college, then you go to a good job, and then you're chasing a thing that I feel like banking, especially, probably more so, definitely more so than any other job I can think of, has this hierarchical like
Yeah.
level component to it, where it's almost like all the banks together got together and said, we're going to gamify this thing, and we're going to make it harder the higher you get, but the rewards, the coins you get for getting higher are much bigger. And if you only put in, if you only fight to get into like level 5, 6, 7, then it's going to be worth it. And it seems like there's no midlife crisis when you're a junior level IT guy, right? It seems to be that when you've gotten the pot of gold, and you're like, oh man, it wasn't about the gold. It wasn't about like crossing the finish line. And yeah, it's kind of a deceptive trick we play on ourselves collectively with kind of holding back the fulfillment of it. It's like you mentioned earlier, like the purpose of it. If you're in your 50s, it's like, has banking lost its purpose in a sense, or did it? Because in one sense, back when banks were first around, 40s, 50s, they were super important. they had these big columns in the middle of cities. They represented safety and security. We weren't going to lose your money. And that was a big freaking deal to not have your money get stolen or lost. And today, I don't think, I'm not worried about Venmo messing up because I know PayPal will just reimburse me, or, it's not top of mind. Like, I look at some of these pictures, you must have seen these, Matt, the ones where people are lined up, like hundreds of people long, and post depression in the 1940s. You're worried about their money, right? It's like, could we ever be in a similar situation like that again? Or are we just eclipse that concern entirely? I don't know. I'm rambling here now, but I think to some extent the creation of trillions of dollars by the Fed could be, a scenario that sneaks up on us, where it's like, it's not access to your money, but access to the ability that your money once had. 100,000 in the bank now, can't do what it could do in the past. And if people, we work with a lot of people from Argentina, and Argentina has some of the worst inflation. Like, It's just amazing how bad it is and how destructive it is, and how, well, it's like, okay, we all recognize that this is happening, and yet collectively they can't seem to muster a solution that works. And I wonder what happened that they got into this inflation trap, and then what do you do about it? Are we headed down that direction? Is this just, like a train headed towards a wall where it's just clear as day that we're headed this trap?
Yeah, look, I don't want to get myself into trouble, but I spent many years in Latin America. I'm not picking on certain countries, but they've also seen a lot of corruption, right? And therefore, I think that's been a component to it. Look, I think if I look at the US, I think, yes, like the concern over the big banks and liquidity and funding as a result of 2008 means that as a much safer environment, it's very heavily regulated. My concerns are the hedge funds and the equity markets, because areas where, you give people complete and utter carte blanche and leverage, then, greed and things like that can create chaos at times. If I look at the advancement of, equity algo trading and stuff like that these days, in my personal opinion, you buy something on an app here, that the pricing of that sort of stuff is controlled by bigger and better people, bigger and more powerful people. So I think there's still that level of, and I'm reading a lot about it at the moment, people's concerned about the equity markets and, is this really just being controlled by some big players, right? It's back to square one. What if that fell down? Yeah. What would that mean? What is that, all these 401ks that you have and stuff like that, you're really in control of it? Is there impacts there?
Yeah, that's a good point. Yeah, it's kind of like it's almost like the spectrum is, on one side you have hyper-regulation, which creates stagnation because no one can really do anything other than what's clearly defined by the government. And then on the other side, you have complete chaos, which is just, you can do whatever you want. There's no rules to this game. Just don't do something blatantly obvious, and you'll be fine. And it feels like the balance is somewhere in the middle. And the thing that we've most fucked up in the past is the thing that we're most concerned about. So I think in our case, in the US, the most recent screw up has been the repercussions of chaos. It's like not having enough regulations creates it so people can exploit the system.
Right.
Greed takes advantage of it, and then we see that. It's like maybe we're experiencing the hyper-regulation side where it's causing stagnation.
Very possibly, yeah. You can go from one extreme to the other, right? If you lock things down too much, then yes, you reduce a level of creativity. I think that, look, it's all very timely. You're thinking about those things, right? Because I think that's a lot of some of the stuff that we're all, concerned about, right? Based on the impacts of the pandemic and printing money and stimulus money. Like, what's the tsunami impact of this thing, economically? We're all worried about.
Are you generally in favor of the amount of money that's been printed and sent out, or do you think that's too much or not enough, or any thoughts on that?
No, I'm in favor of it, right? I'm still the little man. I think more about the little man. I've had some good days, and my banking days, and probably paid more than I was deserved and stuff like that. But this is about making sure that we can all help each other, right? And people are okay. So, Am I concerned about the impact of it? Yeah, sure. I mean, you can't have a money machine that just keeps printing it without at some point recognizing that that's got to be paid back. Just don't want to see it taxed on people like us. I think there'll be much more scrutiny over, taxation, wealthy and stuff like that. I mean, how do you all pay it back, all the stimulus money? You can't just print it, right? The deficit just gets bigger. So you can't not be concerned about that on a macro level, right? But at the moment, look, we've all been hunkered down, doing the best we can, right, to look after each other, staying well. Our focus has been on, now vaccinations, getting back to normality. But I guess intellectually in the back of my mind is that, what's the, a tsunami has hit now, there's always that impact afterwards, right? What will that be? How's that going to play out? And that's where we're hearing in the news, inflation and, I don't think the media sometimes help too much,
Yeah, totally.
So, yeah, I don't know.
Well, it's been fun, man.
Same, in the same boat as you, sir.
I wanted you, Matt. I was coming to you for all the answers, man. This is why we
tuned in. I might be a little older than you, but I'm probably I'm not as smart. I mean, getting old, done some dumb stuff. Well, we look at you guys now for the answers, not the other way around. Age and some experience isn't always the best thing,
That's funny. Well, you've done a lot of really, really great things too. And it sounds like you had a lot of fun along the way. So I enjoyed getting to know you a little bit and hearing about your story. And yeah, man, congrats on all that progress. Is there anything that for listeners that you'd be looking for, whether it's customers or hiring people or raising money or anything that you just want to throw out there into the ether?
Well, you want me to do a sales pitch to the listeners? Is that what you're saying?
Well, I guess you're looking for, what would you be looking for? Bank customers as banks? I mean, we probably don't have, maybe we do.
I think we, look, we support, no, where my interests lie, look, typically I think a lot of our businesses come from banks and insurance companies. But what we have been focusing heavily on at the moment is a lot of the explosion of fintechs, right? There are some really smart people out there. We're talking to someone at the moment with the use of like blockchain in things like foreign exchange and stuff like that, right? To reduce settlement timing and some of these old school dinosaur timeframes associated with settlement of products, right? We talked about it earlier, where you can Venmo money or within seconds, but you want to buy some sterling and it's going to take 2 days to settle. It's just ludicrous.
Yeah.
So our focus is also now pivoting much more to to fintechs and extensions of that, helping them support their products. Because one thing I will say is that we aren't PowerPoints with no substance. What we are is strong, deep technologist people, right? CPQi is a bunch of people that have done this stuff all their life. They've executed against it. And we're doing some very cool stuff, with blockchain and AI and cloud migration. So there's some real tangible experience that we offer people to help bring their ideas.
CPQi?
What does it stand for?
Yeah, I love it. What does CPQi stand for? Yeah, you read my mind.
The owner-founder can't explain it to me. I guess he probably had a cocktail one night and came up with it. It sounds very catchy, but ironically cannot explain to me. So what does it stand for? No idea. Apologies. No idea.
It's yeah. Well, I like it. It sounds sophisticated. I like the lowercase I at the end.
Yeah, he probably came up with, what was it, a .com era or something. Everyone was doing I at the end at some point. Now it's hashtags.
That's funny. Yeah. I love it. Well, Matt, this has been fun, man. And where people wanted to reach you, are you on any social medias or anyway?
I'm an old-fashioned man. LinkedIn probably is probably the best thing with me.
LinkedIn. LinkedIn's not that old-fashioned.
No, absolutely not. It's still the leading.
I thought you were gonna say send me a mail, send me a postcard.
Hey, why not? Why not? Living on top of New York, happy to send my address. There's plenty of room here. Plenty of room. LinkedIn is always, I guess I'm probably most active on that, but not a Twitter guy or anything like that, I'm afraid.
We'll throw these in the show notes, and it has been a pleasure, sir. So thank you again for coming on.
You're a good man. Lovely to meet you.
All right, take care. Bye-bye.